friends, and welcome to the channel. My goal is to educate and inform all of you on the fundamentals of investing. Today we're going to be talking about stocks, what they are, and why understanding them is important for any beginner investor. Let's jump in. A stock, also known as a share or equity, is a type of asset that represents ownership in a company. When you buy a stock, you're essentially buying a small piece of that company, and as the company grows and becomes more profitable, the value of your stock is likely to increase. This can make stocks a great investment option, as they have the potential to generate significant returns over time. Now, there are two main types of stocks: common stocks and preferred stock. Common stock gives its owners the right to vote on company decisions, such as the election of board members, and also entitles them to a portion of the company's profits, also known as dividends. Preferred stock, on the other hand, does not come with voting rights, but it typically pays a higher dividend than common stock and has a higher claim on the company's assets in the event of a bankruptcy. When you purchase stocks, you'll likely be purchasing common stock. Now, it's important for beginner investors to understand stocks because they are a key component of many investment portfolios. By owning stocks, you can potentially benefit from the growth and success of the companies in which you invest. Additionally, stocks can provide diversification to your portfolio, which can help reduce risk. For example, if you only invest in one company and that company experiences a downturn, your entire investment could be at risk. But if you own a variety of stocks in different companies and industries, the impact of any one struggle is likely to be less detrimental to the entirety of your portfolio. To give a specific example, let's say that you want to invest in a technology industry. One option could be to buy shares of Apple, a company that is known for innovative products and strong financial performance. Alternatively, you can invest in a technology-focused mutual fund, which would give you a diverse range of technology stocks in one investment. This would provide you exposure to the technology industry without the need to research and select individual stocks on your own. So how'd this all come about? Investing in business ventures and trading assets for gain has a long history, but it's widely recognized that the first modern stocks were issued by the Dutch, and the infamous Dutch East India Company was the first publicly traded company in history. Over the next few centuries, stock markets grew and expanded, with the first stock exchange being established in Amsterdam in 1602. In 1792, a group of New York City merchants signed the Buttonwood Agreement, which established the New York Stock Exchange, or NYSE. You may have heard of this exchange, as it's grown to become the biggest exchange in the world. In conclusion, stocks are a valuable investment option that can help you grow wealth and diversify your portfolio. As a beginner investor, it's important to understand the basics of stocks and how they can fit into your overall investment strategy. Thanks for watching, take care, and I'll see you in the next one.